The Nifty's opened at 18,280, just a gain, a slim gain of close to about 0.6%. There has been a bit of a pickup in the market. We're currently up close to about 67 points on the Nifty. We're currently up close to about 90 points on the Nifty. The sensex has gained nearly 300 points.
This is the third up move that we are seeing, and you can see that on the intraday graph. So almost 100 points is what you have. It's 160 points. But 80 of the 160 points, 50% of the gains are five names once again. It's Reliance, HDFC Limited, ITC, Bharti and Lever.
Hello and welcome to CNBC-TV18. You're watching Markets Today, the show where we track around 6 hours of the day's trading action in just 5 top headlines. I'm Rajat D'Souza. Let's get straight to the headlines for the day. Indian markets shrug off worries to snap off a 2-day losing streak. The sensex and the Nifty rise 1% each. Autos are amongst the Nifty's top gainers, with the index rising close to 2%. IT stocks sulk after Accenture implies slower growth ahead by maintaining its guidance despite a strong first quarter. Comments on clients focusing on cost also weigh on the sector. Higher exports and lower GST on biofuels help sugar stocks close on a high. Dhampur Sugar, EID Parry and Dalmia, all of them clock gains in today's trading session. Yes Bank assigns 48,000 crore rupees of stress assets to JC Flowers Asset Reconstruction Company. The stock closes flat after rallying in early trade following this news. Phoenix Mills firms up after it buys a land parcel in Surat, while specialty restaurants soars 14% as the board is set to consider a fundraise plan on Wednesday. Meanwhile, Sun Pharma slips in trade as its Halol facility gets a US FDA warning letter. Straight then to the day's market action. The Wall Street regained Friday's losses, with the Nifty and the Sensex gaining close to around 1% each. Reliance Industries, HDFC and ITC, they backed for the bulls, while IT stocks, well, they were the ones that were pulling back the index. The broader markets mildly underperformed the benchmark indices. Prashant Nair is with us to run us through some of those details. Prashant.
There was no opening dip like what we've gotten used to, but there were intraday dips. Even so, the market rallied on and ended almost at the high point of the day, giving bulls hope. Thursday was tough. Friday saw a huge amount of selling pressure. But today, as we start a fresh week, it's green all around. Banks, well, they were not quite up to the mark as the Nifty, but, they were up reasonably, 0.5% or so. The Nifty, of course, was up almost a full 1%. Mid caps and small caps participated as well with about a 0.5% gain each, but they did come off a little bit towards the end of the session. 5 stocks, Reliance, HDFC, ITC, Lever and Bharti, contributed 80 of the 160 points that you had on the Nifty. 50% of the gains came from just 5 names today. Tech names were under pressure, Infosys and TCS in particular. Nothing large, but they were down generally, otherwise up kind of a day. Broader market gains, very pronounced. It was not as if it was an outsized advances to declines ratio. Some 1,300 stocks higher, 900 lower, so the difference was not huge. But what was up with volumes. Suzlon, Renuka Sugar, UTI AMC, the insurers, the PSU insurers, GICRE, LIC, New India Assurance, rallying away. HUDCO, PNB Housing, and so on and so forth. Sugar for the second straight day did very well. Public sector banks are continuing to pull back, and we put that piece out in the middle of last week. And, they are down. UCO, Canada, Punjab and Sindh Bank came off a little bit. The markets had a good session. I think US market stability will be important to track as we kind of go into the end of the year. The 20-day moving average is the near-term level to watch, above which, I think bulls will find some more confidence. That is still about 120, 130 odd points away from where we left off. Back to you.
Thanks a lot for that, Prashant. Well, earlier today, we spoke to Jay Srivastava, Chief Executive Officer at Dimensions Corporate Financial Services, to discuss the best stocks to invest in, Indian IT stocks, and the do's and the don'ts, and how to get the best returns. Let's hear out what he had to tell us.
I think for most people who do on a salary side, the best thing is your PF. PF gives you the best returns compared to all the debt mutual funds. So I'm not suggesting debt mutual fund at all. I've been suggesting that you look at your PF, you look at your debentures that are available in the market, look at even government bonds. They give a better yield at this point in time. State government bonds, you can buy from the RBI window directly. You don't need a broker for that. So multiple options. Debt mutual fund, I would put the last or lazy options. If you're a lazy investor, you go there. So I would suggest to people is either stay away from buying, or if you really need to spend your money, do it the right way, spend it on holidays. Equity is not the place where you're going to be happy in the next year. Only long-term investment I find in this world, and including India, is commodities companies, because there are few, and who are there are monopolies. So if you were to ask me in equities, only one long-term bet I can still go for, and I'll still keep investing, is the commodity companies, both India and abroad. If the recession in the West comes, the rest of the market will also go down along with it. So I'm saying if you need to invest in this market, and I would sincerely believe the commodities is still the place to be, then commodities has to stay firm or go up. Because yes, recession will put it down, but also what it does, recession, is that it will take away new explorations, new sites, new mines will not be explored any longer. IT is a good for India. It's definitely good for India. The problem is that you have to be clear about what stock you're selling. In India, we basically believe the top two are the only ones to look at. The rest have been laggards. They do perform sporadically, but they're never given consistent return. I would say if you were to put in IT, hold this money for some time, keep watching the US market, and if you get a democratic government again in next year and a half time, you need to exit your IT portfolio, because that's disaster. This is what has happened post-Trump in the US. IT companies are now facing the biggest disaster. If next president also becomes Democrat, you run out of the US market if you have not already run out of it.
Well, moving to the second headline now, Accenture's revenue growth in its first quarter has beaten guidance. However, the company maintained lower growth projections despite a strong first quarter implying slower growth ahead. The news weighed on India's IT stocks, with major players closing with cuts. Rima is with us to run us through a quick analysis on that front. Rima?
Thanks so much for that. So Accenture's stock price itself was down 6% post numbers. On Thursday and Friday combined, the Accenture share price had declined by close to about 10%. A quick word on the numbers. Q1 revenue strong, revenue growth of 15% ahead of the company's own guidance. But despite a strong Q1, the company maintained its full year revenue guidance of 8 to 11%, which basically means that things will slow down in the second half of the year, because in Q1, they've done close to about a 15% growth. The management commentary also indicates that the clients are now turning caution. So they are saying that the focus of deal wins, the new deal wins, is more towards cost optimization. They've seen some slowdown in the smaller size deals. Morgan Stanley says that they see limited triggers for re-rating of the Indian IT companies in the near term. Citi says the management comments on IT budgets in the Q3 earnings call will be a key point of focus. They're cautious on the entire sector. Infosys is the only buy stock in the entire IT pack for them. Nifty IT continues to remain under pressure. It's down nearly 5.5–6% so far in December, and for the year so far, it's lost 26%. Back to you.
All right. Thanks a lot for that, Rima. Well, moving to the third headline today. Sugar stocks closed on a high on the back of higher exports and lower GST on biofuels. Dhampur Sugar, EIT Parry and Dalmia, all of them clocked sharp gains on this news. Manisha Gupta is with us to run us through a wrap on the key tailwinds for the sector.
Another very strong day for sugar, and the good news continues to trickle in for this sector. The latest has been that the GST on ethanol blending is now reduced from 18% to 5%, and this has been done for the private refiners. Earlier, reduced GST was applicable only on the public sector OMCs. The other thing is that the government has allowed 20% ethanol blending starting from 15th of December 2022. That means government is quite serious, and that also means that the target of 20% ethanol blending by 2025 perhaps could become a reality. The third thing that you are looking at is the international sugar prices. The raw sugar tightness in the international markets is keeping the prices on multi-month highs onto this one. The latest data from ISMA shows that while the sugar production is up by 5.5%, and that is a positive, the other thing that the street is looking for is that while the sugar exports are contracted to nearly 4.5 to 5 million tons, but the sugar that has actually got out of the country is less than 1 million tons, and that is keeping a premium on the international sugar prices.
All right, Manisha, hold on though. Now from sugar to coal. Coal prices witnessed a surge of close to 21% in December alone. This rise is largely driven by shortage of gas in Europe. Manisha, run us through details on this front.
Well, coal continues to outperform the energy sector. We have seen 21% of gains in December, up 140% for the year 2022. This year started with $157 a ton. We saw an all-time high of $450 a ton in the month of September, and we are currently holding around $405 a ton. Support comes in from the fact that Russian exports are expected to continue to decline from where they were last year to where they are right now, to around 152 million tons in the next year there. Also, when you look at Indonesia, there the thermal coal exports are continuing to be on the stronger side, from 432 in last year to nearly 438 million tons this year to 450 million tons in the next year as well. What the markets also are looking at a strong demand of power generation in Europe and many countries in Asia, including India, where we are looking at near record imports of thermal coal are some of the factors which are expected to be supportive. In any case, you are looking at winter season demand, and whichever way that you look, the coal consumption is expected firm. The underinvestment in coal is yet another factor which could be keeping the prices on the higher side. The expectations are from various banks and brokerages that the coal prices could average anywhere between $280 on a conservative side to higher than $485 a ton. That would mean a new high coming in for the coal prices. Most banks and brokerages also believe that it is only about 2023 or 24 that the coal consumption and prices will remain strong. 2024 onwards, you could be looking at a decline here.
All right, thanks a lot for that, Manisha. Well, moving on to some telecom news now. While Jio and Bharti Airtel added subscribers, Vodafone continues to lose them. As per the October data, Jio has added the most number of subscribers for the 7th consecutive month, whereas Vodafone has lost for the 19th month in a row. Rima is back with us to run us through details on that front. Rima?
Thanks so much for that. So the first takeaway is Reliance Jio has added the most number of subscribers for the 7th consecutive month. In the month of October, Jio added more than 14 lakh subscribers, while Bharti Airtel has added 8 lakh subscribers. In FY23 so far, that's in the first 7 months, where Reliance Jio has beaten peers in terms of subscriber addition, Jio has added nearly 1.7 crore subscribers, while Airtel subscriber addition stands at sub 50 lakhs. So Jio has added more than 1 crore subscribers in the first 7 months compared to Bharti Airtel. Vodafone Idea, on the flip side, continues to lose subscribers. In the month of October, they've lost close to 35 lakh subscribers. In FY23 so far, they've lost 1.5 crore subscribers, and their market share continues to slide lower. Currently stands at 21.5%. If you look at the October market share, it's Reliance Jio which tops the subscriber market share at nearly 37%, followed by Bharti Airtel at 32%, and then you've got Vodafone Idea at 21.5%. Now, analysts say the outlook for Vodafone Idea continues to be a bit uncertain because they continue to lose subscribers. The market share continues to slide. The government equity conversion has been pending since January of this year. The debt is high at 2.2 lakh crore as of 30th September 2022. The interest burden is more than 90% of the company's market capitalization. While peers are racing ahead in their 5G plans, Vodafone Idea is yet to announce their 5G plans. And if you just look at the P&L, in the last 4 quarters, in the last 12 months, the losses are in excess of 28,000 crore rupees.
Got that. Thanks a lot for that, Rima. Well, time now for a quick break, but on the other side, we'll be back in a jiffy with the remainder of the headlines. Stay with us. Back, you're still with us on Markets Today. Well, let's run you through the rest of the headlines that we're tracking for you. The fourth headline today, Yes Bank was up in early trade after the bank plans to sell stressed assets worth 48,000 crores to JC Flowers ARC. Abhishek Kothari, he's tracking that. He joins us to fill us in with more on that front. Abhishek?
Yes Bank to sell identified stress worth about 48,000 crore to JC Flower ARC. So this will be in the structure of 15 to 85, that is 15% cash and 85% SR, that is security receipts. Recoveries in FY23 or till 30th November 2022 will be adjusted to the stress assets which are being sold. Talking about stress assets, let's take a look at Yes Bank's different stress assets. Gross NPA at about 27,400 crore. restructured book close to about 6,000 crore, and write-offs over the last 8 to 9 quarters have been more than 25,000 crores. So these are the stress assets which could get sold to the ARC. View is that this will clean up the balance sheet, this will free up the capital, so they will have capital for growth, and stress in the balance sheet will reduce. So positive for them. Back to you.
Got that. Thanks for that, Abhishek. Well, UTI Asset Management Company surged nearly 10% in trade after a report suggested that the Tata Group is looking to buy a majority stake in UTI AMC from 4 state-owned financial entities. Surbhi joins us to fill us in with more on that. Surbhi?
Hi, thanks for that. So UTI AMC has been surging in trade today, and that is because the report suggests that Tata Group is in final talks to buy a majority stake in UTI AMC from 4 state-owned financial entities. PNB, LIC, SBI and Bank of Baroda together own close to 45% stake in the company. The reports also suggest that the final agreement is being sought on deal valuation and internal approvals have been secured. Tata has also received in-principle nod from T. Rowe Price Group, which owns close to 23% stake in the company. If this deal goes through, the combined firm will be the 4th largest AMC in India. These reports have not been independently verified by CNBC-TV18.
Okay, thanks for that, Surbhi. Well, moving on to some IPO news then. Investor solutions provider KFin Technologies IPO has opened up for subscription today. The management told CNBC-TV18 that the SIP market share has increased 42% and the long-term EBITDA margins will be in the range of around 42 to 45%. Let's hear them out.
We have seen market share gains from about 26% to 35% in the case of equity. Okay. We have seen a SIP market share increasing close to 42%. So we've been range bound, 40 to 45% in the past, right? And we'd like to believe that anything beyond that, if we could accomplish, we would love to plow back in terms of additional, modes for creation for the future. International for the period ending September was about 13%, right? And we have made certain acquisitions, not just managing the investor solutions, but also for fund accounting and administration, which also has international presence. We'd like to believe that, over time, we will be present not just in Southeast Asia, but, hopefully in the US and European markets as well. And we want to orchestrate a revenue pool of probably about 20% in the near term in terms of the overall pool, even as it expands.
All right, moving to the 5th headline today, the pharma sector was in focus with a number of stocks buzzing on the back of news flow. Ekta joins us to run us through a quick roundup of all the pharma action. Ekta?
Well, yes, I'll start with Sun Pharma, which is in focus because they did inform the exchanges that they have received a US FDA warning letter for their Halol facility. Now, remember, this is a part of the process of receiving an import alert, which they had already informed investors about around 2 weeks ago. Remember that the Halol facility was placed under import alert on the 8th of December 2022. That basically implies that all future shipments of products manufactured at the facility are subject to refusal of admission in the US unless the US FDA is satisfied with the remediation which is undertaken by the company at the Halol plant. The US FDA has also excluded 14 products from the import alert, which is subject to certain conditions. And remember that the supplies from the Halol facility were around 3% of total sales. With these 14 products being excluded, the financial impact is expected to be less. Alembic is in focus because the US FDA issued 5 observations to their Jarod facility. They have said that these observations are procedural in nature. Dr. Reddy is in focus in today's trading session because they have said that they completed the phase 1 study of DRLTC, which is basically the biosimilar tocilizumab, which is used for arthritis. They said the phase 1 study basically indicated similarity with the reference products in Europe as well as in US. They will be conducting global phase 3 trials now. Lastly, Shilpa Medicare has launched a cancer drug in the Indian markets. It is of a higher dosage and it is expected to disperse into water within 90 seconds and is expected to possibly be more beneficial for patients. The street will watch out for how effectively the sales take off for this particular drug. The company has said that they will look at launching this particular drug in other markets as well.
Thanks a lot, Ekta, for that dose of pharma. Well, moving on to specialty restaurants then. It zoomed close to around 14% after news that the board is set to consider a fundraise plan on Wednesday. Mangalam is standing by to run us through with more details on that. Mangalam?
That's right. Specialty restaurants actually is in focus today. It was doing well in trade, and that's primarily on account of the fact that they've announced that they will raise funds on, or they will mull fundraising via a board meeting on December 21st. It could be raise of issuance of equity, or it could also be, raising convertible instruments for the company. The big question here, however, is that it's a debt-free company and it hasn't raised funds in a while. So what is this fundraise for? Is it a financial investor who's come in, or is it a strategic investor? The stock has been a star performer this year, up almost 157% odd. And remember, if you just take a look at the fundamentals, they've marked a turnaround over the last couple of years as well. So the company's revenues over the last few years, pre-pandemic, would be between 300 to 350 odd crores, then took a big dip during the pandemic years of FY21 and 22 as well. But then in FY23, the first half itself, they've done about 180 odd crores. You double that and you would see the company reporting the highest ever revenues if the second half, as the case is for these companies, beats the first half itself. But importantly, it's the profitability where the company has shown a marked improvement. In fact, FY22 was the first year in the last many where the company actually broke into profits. The second half of the year did extremely well for them. And in the first half of this year itself, they've done nearly 3 times the profit that they've done in the entire FY22 itself. So things are looking strong. What are the drivers for them? The biggest one, of course, is the fact that they've entered, more return accretive businesses like cloud kitchens, etc., and ancillary revenues have been accruing to the company. Secondly, they've also optimized a lot of their costs during the COVID period, and they have sustained that during post-COVID as well. And finally, rationalization of stores and not expanding, indiscriminately is something that has helped them too. Now the bigger question, what are the funds going to be used for? Will it be financial, or is there some strategic interest in the company?
Okay, all right, Mangalam, thanks for that. Well, Phoenix Mills, that was up in trade today after news that the company has announced an acquisition of 7-acre land parcel in Surat. Sonal Bhutra joins us to fill us in with more on that. Sonal?
That's right, Phoenix Mills is in focus because the company has gone ahead and acquired a land in the city of Surat, which measures around 7.22 acres, and the total consideration for this is 510 crore rupees. Land is acquired via Thot Mall and Commercial Real Estate, which is an indirect subsidiary of the company, and this is the subsidiary which will go ahead and develop the retail asset. It will be a leasable area of 1 million square feet, and the retail development will complete by FY27, so it will give an expectation of the kind of cash flows that can start coming in the books of the company from FY27. Kotak Institutional Equity says that Surat helps further expand the geographical presence of Phoenix Mills. The acquisition of Surat land parcel lends further visibility for growth of the company. And this asset is the second asset that they are creating in the state of Gujarat. The first one was Phoenix Palladium in Ahmedabad, which is likely to be commissioned very soon. They have a ad rating on the stock with a target price of 1,640 rupees per share.
Well, thanks for that. Well, JSW Infra is likely to launch an IPO by May of next year. Sources say that the company is looking to file the IPO DRHP with the market regulator by Jan or Feb of 2023. Yash Jain, well, he's on top of that one. He joins us to fill us in with more on that front. Yash?
Well, as far as JSW Infra is concerned, the company counts itself as one of the top 5 port companies in the country. And what we've been given to understand is that JSW Infra has appointed JM Financial as the lead banker to its IPO. The company is in the process of appointing more investment bankers as far as that IPO is concerned. Importantly, on the timeline, what sources tell us is that JSW Infra is looking to file the IPO DRHP with SEBI by February of 2023 and then eventually launch its IPO by May of 2023. The size of the fundraising, that's quite significant. Sources tell us that JSW Infra is looking to raise about 3,000 crore rupees through this issue. Now, as far as that 3,000 crore amount is concerned, that will entail an equity dilution of about 10%, which a simple calculation will tell you that the company expects to get value through this IPO at about 30,000 crore rupees. As far as the IPO itself is concerned, it's a complete fresh issue, which means that 3,000 crore rupees, which the company is looking at raising, comes into the company for its expansion. We've written to the company, that is JSW Infra. A response from the company is still awaited.
All right, Yash, thanks for that. But on that note, we have run out of time on this edition of Markets Today. Thanks so much for watching.
Pooja, you